Hey there, everyone! Welcome back to Channel Name. I'm so glad to see you here today. If you're new to the channel, make sure to hit that subscribe button for more educational content on finance, technology, and everything in between. Today, we're diving into a fascinating topic that's been buzzing in financial circles for quite some time. We're going to explore the differences between cryptocurrency and fiat currency. So, let's get started. Now, you might be wondering, what's the big deal about cryptocurrencies? Why should we care about them when we already have traditional money, fiat currency, at our disposal? Let's break it down. First up, let's define what we mean by fiat and cryptocurrency. Fiat currency is basically the money we use every day, like the US dollar, euro, or Japanese yen. It's issued by governments and has value because a government maintains it and people have faith in its ability to hold value. For example, when you go to a store and buy a cup of coffee for $5, you're using fiat money. That $5 bill has value because the government says it does, and people trust that they can exchange it for goods and services. On the other hand, cryptocurrency is a digital or virtual form of currency that uses cryptography for security. Unlike fiat, cryptocurrencies are decentralized and typically built on blockchain technology. Think of Bitcoin, Ethereum, or Litecoin. These are all examples of cryptocurrencies. So, what exactly is the blockchain? In simple terms, it's a public ledger that records all transactions across a network of computers. This means that every transaction made with cryptocurrency is transparent and secure, as it cannot be altered retroactively. Now let's break down some key differences between these two types of currencies. Fiat currencies are centralized, meaning they are regulated and controlled by governments and financial institutions. The Federal Reserve in the United States, for example, manages the dollar's value and supply to ensure economic stability. Cryptocurrencies, however, are decentralized. No single entity controls them, which means they operate on a peer-to-peer basis. This decentralization reduces the risk of government interference, but it also means that users must take full responsibility for their transactions. Fiat money exists in both physical and digital forms. You can hold cash in your hand, and you can also have a digital balance in your bank account. Cryptocurrencies, on the other hand, are entirely digital. You can't physically hold Bitcoin or Ethereum, they exist only in your digital wallet. This can make cryptocurrency feel more abstract to some people. Fiat currencies generally have more stability due to government backing and regulation. For example, the US dollar is considered a stable currency with relatively low inflation rates compared to many cryptocurrencies. In contrast, cryptocurrencies are notorious for their price volatility. For instance, Bitcoin has seen its value fluctuate wildly, rising from just a few $100s in 2013 to nearly $60,000 in 2021, before dropping again. This volatility can be appealing for traders looking to profit, but it makes cryptocurrencies a less reliable store of value for everyday transactions. When you make a transaction with fiat currency, especially internationally, it can take a while for the money to transfer, and there are often fees involved. On the flip side, cryptocurrency transactions can be processed much faster, often within minutes, regardless of where you are in the world. However, transaction fees can vary significantly based on the cryptocurrency network's current demand. Fiat transactions are typically linked to personal identities. When you make a purchase with cash, it's anonymous, but digital transactions often require you to provide personal information. Cryptocurrency, however, offers a certain degree of anonymity. Although transactions are recorded on the blockchain, they don't directly reveal the identities of the users involved. This can be appealing for those who value privacy, but it has also raised concerns about potential misuse for illegal activities. Now that we've explored these differences, let's take a moment to discuss the potential benefits and drawbacks of each. Fiat currency is widely accepted, stable, and easier for everyday use, but it can be subject to inflation and government control. Cryptocurrencies offer exciting possibilities for decentralized finance, low transaction fees, and privacy, but they come with risks of volatility and regulatory uncertainties. So, to summarize, fiat currency is government-backed and centralized, while cryptocurrency is decentralized and digital. Each has its own advantages and challenges. Understanding these differences is crucial as we move further into a world where both forms of currency coexist. If you found this video helpful, please give it a thumbs up and share it with your friends. Have you tried using cryptocurrency, or do you prefer good old fiat? Let us know in the comments below. Don't forget to subscribe for more insightful content, and we'll see you next time.